Shares in Sainsbury's jumped as much as 20% at one stage after the supermarket announced plans to merge with Asda, which is owned by Walmart. The deal values Asda at around £7.3 billion, with the combined entity overtaking Tesco to become the UK's biggest supermarket group. Sainsbury's says it expects £500 million of synergies from the deal, with no store closures. Joining me now via Skype from Bradford is Steve Dresser, Director at Grocery Insights. Steve, thanks for speaking with us today. What did you make of the massive share price reaction this morning on Sainsbury's, up 20% at one point? Is it a knee-jerk reaction, or do you think the potential for this deal warrants a considerable premium?
I think there are obviously a few short sellers who got hurt this morning with the news. I think, clearly the market would always be, I think, quite positive, for this, regarding Sainsbury's, given their general sort of performance in the sector. They've been consistent enough, but you could sort of see the returns ebbing away over the last few years. They've done a few things with Netto and Argos that haven't, they've worked to an extent. I think they've learned things, but they've not really catapulted themselves into a clear second place. And obviously Tesco and Booker, that suddenly means that Tesco, the biggest market player, has even, an even greater share, and indeed scale. So I think that did sort of spook the investors. So obviously Sainsbury's growing, sort of their share price, if you like, I think is a massive vote of confidence. But I think the investors will look at, favourably, because for both Sainsbury's and Asda, it's their only real option. I think the deal works for all three parties perfectly.
So clearly the landscape is changing a lot, whether it's from Amazon, whether it's from the German discounters, the likes of Lidl and Aldi, or indeed online competition from Ocado, or even Just Eat and Deliveroo. Do you think inorganic growth is the only way to survive these days?
Yes, I think so. I think obviously there's so much now in the mixing pot, and if you look at discounters as an example of that, they have, they've consistently opened 70, 80 stores a year, and their growth plans are quite obvious to everyone. And increasingly they're opening, not just from the north, but they're starting to really look at the south now, which is obviously Sainsbury's very, very strong in the southeast, where their heritage and base is, and that's almost been their golden goose. And with Aldi and Lidl opening in those areas, suddenly, longer term, it does put Sainsbury's under significant pressure.
Yeah. So sorry to interrupt you, but.
Yeah. Of course.
I just wanted to ask you about the synergies, because Sainsbury's says it's expecting to deliver £500 million worth of synergies without closing any stores, and also whilst cutting prices. So where are those cost savings going to come from?
I think someone's quoted £7 million a week as well, which is, seems a lot of money. I think if you look at the combined group and you look at the actual back office tasks that both companies will carry out that often customers don't see. For example, the purchase of electricity is an example, utilities, logistics, how things get to stores. There are a number of cost savings that you can make purely by combining with, fewer providers to get a better price. But also there will be significant ways of working improvements from both sides. So it may well be that Asda have a better flow of goods from depots to stores versus Sainsbury's, so the best practice can be used, and vice versa.
Now, Sainsbury's obviously acquired Argos in 2016, and it seems as though it wants to use Asda stores in order to use them as pickup points for Argos deliveries. How important is the non-food business to this merger?
Huge. I think Argos, surprisingly, seems to be a real sort of linchpin in this deal, which is, for anyone who sort of knows Argos, it's quite an outdated model on paper. But the big thing it brings is the 1 hour delivery option. It brings the same day delivery, which Amazon, they can try to do, but they can't really do with any confidence. Obviously Argos can do that, and that's why Sainsbury's liked the business so much that they wanted to buy it. If you add more pickup points in convenient areas such as Asda stores, where people can park up and they can order things same day, it keeps those sales away from Amazon, and that's the crucial element to this deal.
Now, if this merger does go through, it's going to create the largest supermarket in the UK, overtaking Tesco. How likely is it that it's going to pass these competition concerns, and to what extent does the Tesco-Booker merger help the Sainsbury's and Asda combination get past the mark?
So I think the Tesco-Booker merger is, obviously these talks have been ongoing for a while. The Tesco-Booker merger, I think, is a different deal in the sense that Booker are a wholesaler, not a retailer. So there are similarities, but it is two different businesses. Both Sainsbury's and Asda obviously are retail businesses who both operate stores. there are some arguments that because of the competition level in certain areas, that customers won't be impacted if Sainsbury's and Asda are owned by the same overall company, because there's B&M and there's Aldi, Lidl, Iceland, there's all these other retailers close by to shop with. There will be some pockets of the UK where there's Asda and Sainsbury's are the two dominant players, and to leave both of those as dominant players when they're both owned by the same company is potentially a competition risk, and that's where the regulator will step in. I don't think if that was the case, Asda and Sainsbury's would raise prices in those areas. It wouldn't be worth the PR, but the regulator has to be sure that customers aren't impacted. So I think there will be some divestments. It depends on what to what criteria they use. I think Tesco Booker is a different deal, really. I do think it was a smart deal by Tesco, but it's a very different combination of businesses. These Asda and Sainsbury's are basically both supermarkets, both trading in the same space.
Now, this is likely to be the first major test for Andrew Tyree, who's the new chief of the competition watchdog. To what extent do you think he might lean towards firmer action in order to make his mark?
That's always a risk. Obviously, the outgoing CEO did the Tesco Booker deal. This is going to be a huge deal, regardless of who's in charge. It's a massive change in the industry, and I think whatever happens after this, things will never be the same again. And obviously, we're looking now to assume that this deal will sort of proceed to phase 2 without anyone else coming in and potentially bidding for Sainsbury's. There's no guarantee that won't happen. We don't know who would come in, or if anyone will, but that's still a consideration at this stage. I think that just a huge amount of activity. I mean, politically, there's been commentary over the weekend before anything's even announced that there'll have to be an investigation and regulation. And I think we need to really sort of just see what the detail is, and sort of let the regulator do the work, and assume that their criteria will be as stringent as it always is.
And on the commentary coming out from over the weekend, do you think there's a risk that this deal could get quite political? We heard from the Labour Party, who said this merger risks squeezing what little competition there is in the grocery market further.
Yeah, I do not buy that argument. I think our market is one of the most competitive in the world. In many cases, leads the world in best practice, in competitiveness, in terms of the relatively small piece of land we all live on, and just to operate sort of 3 and 4 big supermarkets plus everyone else. It's a huge testament to just how competitive the market is. You only have to look at who from the UK has gone to work for Walmart at senior positions to show to see just how competitive we are. So I don't think it would weaken competition, because you've still got Aldi, Lidl, Tesco, Morrison's, and everyone else in the mixing bowl, so to speak. So I don't buy that argument at all.
So you mentioned Walmart there. It's going to get a 42% stake of the combined entity. Do you think that's just the start? It could potentially grow its stake even further?
Potentially. You have to wonder about the returns. I think if you look at it under Dave Cheesewright, who was the former head of the international business, he obviously had his handsel with Canada and Mexico and all these other, China and India. The Walmart VMAX has real growth opportunities. The UK sort of chugged along, and obviously they did return the dividend payment to Walmart every year, growing profits. I think Judith McKenna has a view now that they don't need to control as the 100% to benefit from the synergies and the learnings from the UK that can be applied to the US business. There's always a potential that they may look to grow share. I would probably indicate it's probably going to go the other way potentially down the track. I think from year 4 they can sort of pull share, they can sell shares or their interest off if they wished. But I think for now, it's a really good deal for Walmart, because they've used a lot of the UK people from Asda to learn about click and collect. And I think, Sainsbury's have great heritage in food. If Walmart are able to get some of the, Sainsbury's food people and quality people, designers and everything else across to Walmart US, their input in, improving food performance in Walmart US by 1 percentage point, for example, would be a huge, cash result for Walmart, given the scale of that business.
I just wanted to ask you more broadly about the sector. Do you think that this deal reignites investor enthusiasm towards the supermarkets? Because it's been a bit in the doldrums recently. All the supermarkets, kind of low returns. Tesco's the only one that's been performing well.
Yeah, I mean, it's almost, it's a bit of a cash furnace, is the UK market, to be honest with you. The prospect returns have been dwindling. Even Sainsbury's, who've been the most consistent player, they've never had a -5, -6% like-for-like performance, have still, margins have fallen, profits just about there, but there's been significant cuts to sort of make that profit level in terms of service and in terms of store standards and things like that. So I think there'll be interest in how this plays out, and potentially some opportunities for sort of some long positions to be taken. Everyone talks about Morrison's now as a potential target for Amazon. Whether that's just rumor and people putting two and two together and getting 5, I'm not sure. But I think the market as a whole, this does underline just how hard it is out there in the UK grocery market, and that's driven ultimately by Aldi and Lidl with their huge focus on quality and price post-recession. And ironically, the likes of Asda taking far too long to actually realise what Aldi and Lidl were doing and why customers liked it and why they were sort of flocking to shop with discounters has led to this today, really.
Okay, Steve, unfortunately we've run out of time there, but thanks so much for joining us. That was Steve Dresser, Director at Grocery Insights, talking us through that merger news out this morning. Thanks so much for watching IGTV. I'm Victoria Scholar, and remember, you can always find me on Twitter at VictoriaS_IG. We'll see you very soon.
Subscribe to IG for educational content, company insight, financial analysis and expert commentary.